The world is facing unprecedented times as the COVID-19 pandemic continues to affect daily life. This global health crisis has significantly impacted the global economy, and the energy sector is no exception. In recent months, oil prices have fluctuated wildly, and now gas prices may surge to $7 a gallon this week. This is a major concern for consumers and businesses alike, as higher gas prices can lead to increased costs for transportation and goods, which in turn can lead to higher prices for consumers. But what exactly is causing this surge in gas prices, and what can we expect in the coming weeks and months? This article will explore the factors contributing to the rise in gas prices and provide insights into what consumers and businesses can do to prepare for these potential price increases. The first thing to understand is that gas prices are largely determined by oil prices, which have been fluctuating wildly in recent months due to various factors. One of the main factors is the ongoing COVID-19 pandemic, which has sharply decreased the demand for oil as people stay home and travel less. This decrease in demand has led to a glut of oil on the market, which has led to lower oil prices. However, in recent weeks, oil prices have rebounded as countries emerge from lockdowns and demand for oil starts to pick up again. This rebound in oil prices has led to higher gas prices, as oil is the main component of gasoline. Another factor contributing to the surge in gas prices is the recent cyber attack on the Colonial Pipeline, which is responsible for transporting gasoline from refineries along the Gulf Coast to the East Coast. The cyber attack led to the shutdown of the pipeline, which in turn led to shortages and panic buying of gasoline in some areas. This panic buying has contributed to higher gas prices in some regions. So what can we expect in the coming weeks and months? It's difficult to say for sure, as many factors are at play. However, some experts predict that gas prices will continue to rise in the short term, possibly reaching as high as $7 a gallon in some areas. However, it's also worth noting that gas prices are notoriously volatile and can change rapidly in response to various factors. For example, if there are no further disruptions to the Colonial Pipeline and demand for oil remains relatively stable, gas prices may come back down in the coming weeks and months. So what can consumers and businesses do to prepare for these potential price increases? One option is to reduce their reliance on gasoline altogether. This could mean investing in electric or hybrid vehicles, or finding alternative modes of transportation, such as public transit or biking. Another option is to look for ways to reduce overall fuel consumption, such as by carpooling or consolidating trips. Businesses can also look for ways to optimize their supply chains and reduce transportation costs, such as by consolidating shipments or using more fuel-efficient vehicles. One of the main ways that consumers can reduce their reliance on gasoline is by investing in electric or hybrid vehicles. Electric vehicles are becoming increasingly popular, and with good reason. They are highly efficient, emit no pollutants, and are often cheaper to maintain than gasoline-powered vehicles. Hybrid vehicles are another option, as they combine a gasoline engine with an electric motor, which allows for significant fuel savings. For those who cannot afford an electric or hybrid vehicle, there are still ways to reduce their reliance on gasoline. One option is to take public transit or bike to work. Many cities have invested in public transportation infrastructure, making getting around without a car easier than ever. Biking is another great option, as it is not only environmentally friendly, but also a great way to stay active and healthy. In addition to the factors mentioned above, geopolitical tensions can significantly impact oil prices and, by extension, gas prices. For example, the recent conflict between Israel and Palestine led to a spike in oil prices as investors grew concerned about potential supply disruptions in the Middle East. Similarly, political instability in oil-producing countries like Venezuela and Iran can lead to fluctuations in oil prices. Climate change and the push toward cleaner energy sources can also play a role in the price of gasoline. As more and more countries set ambitious goals to reduce their greenhouse gas emissions, demand for fossil fuels like oil and gas is likely to decrease. This shift away from traditional sources of energy can put downward pressure on oil prices, which could, in turn, lead to lower gas prices. However, it's worth noting that the transition to cleaner energy sources is likely to be gradual, and the impact on gas prices may not be felt for many years to come. In the meantime, consumers and businesses must continue grappling with the reality of higher gas prices. So what can be done to address the issue of rising gas prices in the short term? One option is for governments to intervene and implement measures to help stabilize prices. For example, some countries have implemented fuel subsidies to help offset the cost of higher gas prices for consumers. While these subsidies can be effective in the short term, they can also be expensive for governments to maintain and create distortions in the market that can lead to other problems. Another option is for governments to invest in alternative modes of transportation, such as public transit or electric vehicles. By promoting these alternative modes of transportation, governments can help reduce the gasoline demand, which can put downward pressure on gas prices. However, the transition to alternative modes of transportation can be costly and time-consuming, and may not be feasible for all consumers or businesses. In the long term, there is no question that a transition away from fossil fuels like oil and gas is necessary to address the global climate crisis. However, this transition will not happen overnight, and in the meantime, consumers and businesses will need to find ways to adapt to the reality of higher gas prices. As mentioned earlier, one option is to focus on reducing overall fuel consumption. This could mean investing in more fuel-efficient vehicles or consolidating trips and reducing unnecessary travel. Businesses can also look for ways to optimize their supply chains and reduce transportation costs, such as locating distribution centers closer to customers or using more efficient shipping methods. Another option is to explore alternative fuels, such as biofuels or hydrogen, which can be used to power vehicles and reduce reliance on gasoline. While these alternative fuels are still in the early stages of development, they have the potential to play an important role in the transition to a cleaner energy future. Ultimately, the issue of rising gas prices is a complex one that will require a multifaceted approach to address. While steps can be taken to mitigate the impact of higher prices in the short term, the long-term solution will require a concerted effort to transition away from fossil fuels and towards cleaner, more sustainable energy sources. As the world continues to grapple with the COVID-19 pandemic, the issue of rising gas prices has added another layer of complexity to an already difficult situation. Higher gas prices are far-reaching, affecting not just individual consumers, but also businesses, governments, and the global economy. The immediate concern for many people is the impact of higher gas prices on their daily lives. Filling up their tank can be a significant burden for those who rely on personal vehicles to get to work, school, or other essential activities. Higher gas prices also mean higher costs for businesses that rely on transportation, such as shipping companies or delivery services. These increased costs can ultimately lead to higher prices for goods and services, which can further strain the budgets of individuals and families already struggling to make ends meet. Beyond the immediate impact on consumers and businesses, higher gas prices can have wider-reaching effects on the global economy. The energy sector is a critical part of many economies, and fluctuations in oil and gas prices can have ripple effects throughout the economy. For example, higher energy costs can lead to higher costs for manufacturing and production, ultimately leading to higher prices for consumer goods. This can then lead to reduced consumer spending, which can further slow down economic growth. The recent surge in gas prices reminds us of the challenges we face as a society in transitioning towards a cleaner, more sustainable energy future. While there are no easy answers, there are steps that can be taken to help mitigate the impact of higher gas prices on consumers and businesses alike. By investing in alternative modes of transportation, reducing overall fuel consumption, and exploring alternative fuels, we can chart a path toward a more sustainable future for all. The key to dealing with higher gas prices is to remain vigilant and adaptable. Gas prices can be unpredictable and change rapidly in response to various factors. By staying informed about market trends and taking proactive steps to reduce fuel consumption, consumers and businesses can better prepare themselves for the potential impact of higher gas prices. At the same time, it's important to remember that higher gas prices are not necessarily a bad thing. While they may be a burden for some, they can also serve as a powerful incentive to invest in more sustainable forms of transportation and reduce our reliance on fossil fuels. By embracing these changes and working together to build a more sustainable future, we can ensure that higher gas prices don't just lead to short-term pain, but also long-term gain. In the end, whether gas prices surge to $7 a gallon this week or not, one thing is clear: the future of transportation is changing fast, and we need to be ready to adapt to it. By staying informed, being proactive, and embracing new technologies and ideas, we can build a more resilient and sustainable transportation system that benefits us all. If you liked this video, don't forget to hit the like button and subscribe to our channel for even more interesting content. Stay tuned for our next video, and thanks for watching. Check it out.